Hello everyone, welcome back to another FinMeUp weekly stock watch where we cover the most important stock market news that happened during the week. There's a few interesting companies that's well followed, and we're going to look at Santova, Karoooo, Transaction Capital, who posted some interesting results and has had an interesting year. We're also going to look in the US at Apple, Berkshire, and Palentir. So quite a lot of companies. If you're not interested in any of them, you can just skip to the parts where you are interested. The first one is Santova. They posted a trading statement. Earnings per share is expected to be between R1.51 and around R1.57, representing an increase of 23.2 and 28.2%. Okay, so proper growth in a really uncertain environment where shipping rates fell off the roof and everybody was, afraid that Santova is going to post bad results because the shipping rates are so much down, and their margin is on that entire industry and transaction. But Santova, once again, it is my largest holding. It's been my largest holding for quite some time now. It's sitting on a PE ratio of around 5. If you look at all the metrics, really impressive. But we're not going to comment too much on Santova in this video. The reason for that is they are going to post results in the next week. Okay, so once they post the results, we're going to look at it in highly detail. So probably a 30-minute interview just on Santova on Stock Savvy, where Paul will interview me. He started Stock Savvy. He's already interviewed Sol Financial and Josh Fulune. You can check those videos. But from the previous results, what they've shown the previous years, really well done to the management team. They've entered the US now. They are around 80% of the operations is global. So the higher or the low, better, the stronger dollar and the stronger other currencies will actually benefit them quite a lot. So that's it on Santova. Stay tuned for that video. It's going to be interesting. Also on the FinMeUp app, I'll publish something also exclusively on that. So go check that out.
Yo.
We must actually do one video in load sharing just to reflect on what is busy happening.
8 hours later.
The next company is Karoooo. Sorry for that load shedding break, but Karoooo posted over 1.7 million CarTrack subscribers. That is up 13% compared to the previous year. Net CarTrack subscriber additions, so just for the quarter, remember they are also listed in the US, so these are quarterly results, and this was for the fourth quarter. The net CarTrack subscribers for this quarter or for the year was 191,000. That's down 13%, but it's still growth. It's just lower growth. Total revenue increased by 28%. That is proper to 3.5 billion rand. Subscription revenue, which is the best kind of revenue, increased by 17% to $3 billion. Operating profit increased by 26%. Earnings per share increased by 27%. And Karoooo is overall well positioned for growth with a strong balance sheet and a healthy cash position, and it expects marketing and sales investment to generate robust results in the future. They also posted a dividend of 85 UN shares that will be paid in July. So, overall, looking at the results, CarTrack is a great business. Okay, they've got other businesses. They've got Karoooo Logistics, which is basically pickup, and then they've also got Karoooo. Karoooo is still loss-making. It is basically a WeBuyCars competitor, and we all know what's going on there. It's just in one of those cycles where these car companies or these, I don't know what you call them, but resellers don't do too well. There's a less demand for cars. The economies are struggling. Supply is catching back up. Lower prices. So that's part of Karoooo. But CarTrack's or Karoooo's main business is CarTrack. Okay, and that is an incredible business. CarTrack they've got over 100,000 commercial clients. So they don't have revenue or customer concentration, first of all. And second of all, it's recurring revenue that these companies need. Okay, it is to track where their vehicles are at, where their fleets are at. Even personally, if your car gets stolen, they can track that for you. And, they've got over 1.7 million subscribers. That is massive, and it is growing. They are sitting on a PE of around 23. So, it is not on the cheap side of things, but for a company that's got most of their revenue subscription, they are entering the Southeast Asia markets and Europe. The management has a lot of shares. That's also could be seen as a negative because it is so illiquid. But overall, I'm happy with these results. The guidance is for a slower growth, but it is still for growth. and they have a lot of, operating leverage. So, overall, I'm happy. Paul, any thoughts on Karoooo?
I think it's pretty solid results. It's not amazing, but it's solid growth. We must remember it's still a very newly listed company. It only listed in 2021, and of course there's a dual listing in the United States. Like we've discussed before on this channel, companies often do that. Like Renogen is also doing that to get more exposure to the company in the small, if they want to raise money and so on. So it's a stock that I still keep my eye on. It's not, it's still very new, and you know me, I'm very cautious when it comes to excitement in the market. That's like my one thing. I typically look where most people are bored, but this is definitely not a boring company. But there's a lot of potential. For those of you who don't know, maybe just an interesting, I think you said everything, but maybe just something I can add, because I wrote the stock pick on it. Karoooo, the name, very, very interesting where the name actually comes from. So the CEO wanted to register the company. He loved the Karoooo, so he thought maybe name his company after the Karoooo, but Karoo was already taken. And so he tried to convince the guy, listen, can I buy the company's name from you? And the guy said $1 million. That's the price for the name. And he said, obviously, no way I'm going to pay that just for the name. And so he registered it as Karoooo with 5 O's, and also the domain. He registered everything from 3 O's to 9 O's. If you type any of those variations of the word, you will go to Karoooo's website. So very, very cool. It's definitely a stock that I'm keeping an eye on. Not necessarily something that I yet will invest in.
Yeah, interesting. So just on that, previously it was listed on the Johannesburg Stock Exchange for quite a few years as Cartrack, and the stock actually performed really, really well. So that was just Cartrack. Then they announced that they are going to the US, and there was quite a run and a hype in the share price, and it performed quite well. But since then, the share price has just been stagnant and even a bit lower, and they've just continued with the growth. So, if they continue with the growth, they are ambitious. I've listened to most of their investor calls. They are ambitious for the next few years, and that they can grow around 30% per year. So, if they manage to get that growth, the share price will do really well at some point in the future. But that is if they manage to grow. We all know that the consumer is under pressure and cutting expenses where they can. And some people might think, maybe I don't need Cartrack. But then again, they've locked people in with their contracts. So you have to subscribe for a few years if you want the free installation and all of that. So, quality business, quality management. I'm just continue to hold what I have. And not looking to add more, but not looking to sell either. But yeah, let's keep an eye on them. The next one, Transaction Capital. It's the company that's created chaos in the market, chaos on Twitter and on almost every news channel in South Africa. We all know Transaction Capital's been an amazing business for a lot of years now. We've all believed in the management, buying WeBuyCars is a taxi. People always need taxis, so it's a quality business. And that's actually a lesson to be learned. If people use a service or a company, or if you like the company, or if you think the company is relevant, does not always mean it's a good stock. But anyway, so we don't have to summarize again what happened. But they had a rough year. They had a really, really rough year. And it was mostly due to XA Taxi being really under pressure for quite a few reasons. COVID definitely hurt the business, the floods hurt the business, supply chain, and overall just the business. It is a unique business that is under pressure, okay? So they posted bad results. The share price is down 80% or something the past 12 months. Even in this week, down a lot. We know about the CEO that sold quite a few of his shares in December. Whether it was options or not, I'm not too familiar with that, but then again, the share price fell from 40 Rand. It fell to around 15 Rand. And I know that most of their directors actually bought shares again between 13 Rand and 50 Rand. So a bit of, skin in the game back in. But now the share price is trading at around 9 Rand. Okay, so it's been a rough ride for Transaction Capital. Let's quickly look at their 3 main businesses. The first one is Nutun. That business performs really well. Okay, the revenue increased by 50%. Core earnings from continuing operations increased by 15%, and the CX services now makes 56% of Nutun's revenue, and that's up 32% from a year ago. Nutun really performing well. It has global potential, and the companies also, or the management is confident in this business going forward. WeBuyCars, another business that's really well known in South Africa. I sold a car to them, but some people make the jokes. It's not WeBuyCars. It's we can't sell cars or something like that. But the core earnings attributable to the group decreased by 22%. Vehicles purchased increased by 20%. Total e-commerce sales decreased by 16%. Business-to-business online sales fell by 27%. And the key focus area in the current financial year is driving operational efficiencies and greater sales volume to grow into existing infrastructure. WeBuyCars is still a great business. It is just in one of those cycles where we might see lower growth or lower margins, but it's still an amazing business. And the amount of data analytics that they have on every car, on all the cars, whether you like the business or not, it is a quality business that's going to continue to make money in the future. It's just slower growth that people are wary about quite a few areas in WeBuyCars. For example, are they selling cars? What are their margins looking like? And those things are under pressure, but that is more cyclical. Now for the business segment that is not cyclical, which is structurally damaged, and that is SA Taxi. Gross profit increased by 2%. Headline earnings from continuing operations increased by 5%. Gross loan book grew by 1%. Recovery rates improved from 30% to 34%. Successful implementation of new credit scoring models resulted in a 10% reduction in credit losses. And it's a strategic focus in the next year to increase the growth of the book in South Africa through the implementation of product enhancements and the expansion of the rental business. So, from a quick look at it, it doesn't look that bad. Gross profit increase, headline earnings increase. If you read through the results, it's really complex. But in short, SA Taxi is really struggling. And the management have acknowledged that it is struggling and it's structurally damaged. So they need to make overall decisions and overall iterations to the entire business model, to what they are doing with SA Taxi. So transaction capital is really low. I think it is trading now below its net asset value. This will be, if you buy transaction capital, either it could be a trade, you're thinking it's going to go back to 30 Rand and sell. But for those investors who buy now, your thinking would be then, I really back the management that they can turn the ship around. It's not been a great year. It doesn't look too great for the next year even. But if you buy, you believe that the management will turn this over. Personally, I think the management, they know what they are doing. Everybody has a bad year here and there, but I think they learn a lot of lessons, and I actually think they can pull this around. And I do think they are sitting on some quality businesses, but also on some businesses that's not too high of quality. But I'm not buying. It could be just a little dip in the toe, get some part of the what's happening there, the recovery story. But for me, where I'm currently at in my personal financial situation, I'm happy with the stocks I have. So I'm diversifying a bit into bonds. I recently purchased a home, or it's in the process of that, which I'm using FinMeUp home loans for. FinMeUp home loans is basically where you fill in your information once, we get you quotes from all the banks, and you can choose the best interest rate. If you want more info on that, you can comment and we'll reach out to you. But anyway, so I'm diversifying my investments, and the stocks that I have in my portfolio, I'm doubling down on, and I'm just focusing on them. And those are companies like Santova, like Master Drilling, like Origent, like Karoooo, and a few others. I don't have too many stocks in my portfolio, but I'm not keen to invest in transaction capital just yet. The business, I don't know if how deep the structural issue goes, but that's just on my side. Paul, what's your thoughts?
I have a lot of thoughts. Inflation, load shedding, interest rates, US dollar versus rand, exchange rate. Now, there's so many things to talk about, and everything is going crazy at the moment. So it's, on the one hand, it's very exciting because there's a lot of things happening. It's definitely not boring at the moment. On the other hand, it's like, where are we going? What is happening? And then there's also people worrying about their jobs because ChatGPT is going to take that. It's crazy at the moment. But with regards to the US dollar rand exchange rates, I think I kind of agree with you. The SARB have to step in. They're probably going to step in with another 25 basis points hike. But yet again, how long can we keep doing this? Because people are under pressure. under pressure. So we can't keep doing this forever. I mean, yes, I literally had a braai last night, and the garlic bread, knoffelbroodjie, was like 55 rand. Normally, last time I remember it was 35 rand. Oh, what is going on? I can't even afford this. Now I'm gonna have to make a braai broodjie, shame. But the point is, yeah, we're in interesting times, and to manage one thing would be to sacrifice another. So it's a trade-off the whole time. So we'll see what happens. But I agree with your prediction.
Yeah, let us know in the comments. We'd love to hear what everyone is thinking about this. I mean, it's so interesting. It's so unique. But I do think at some point in not the distant future, they will have to start decreasing rates again, which will definitely help our economy and the consumer that has debt. So just be careful for debt, and make sure if you have debt to pay it off as soon as possible, and also to know the difference between good debt and bad debt. We are launching courses soon on the FinMeUp app, and you can learn more about debt and you're improving your credit score and all of that. Apple, okay, back to the US market. Apple earnings per share of $1.52 beat expectations, revenue beat expectations. Apple said it expects a year-over-year revenue growth next quarter to be similar to the year-over-year growth from this quarter. Apple has spent almost $600 billion buying back its own stock over the last 10 years. $600 billion buying back its own stock. That is crazy. Apple has authorized an additional $90 billion worth of share buybacks. This is incredible. This is a great way to create shareholder value over the long term. It basically decreases the overall share, so you get better earnings per share that you own. So you'll see a better PE ratio at the end of the day. You'll see sustained better earnings. It's just another way of providing value to shareholders that's not in the form of dividends, because you make the earnings per share better. We also see that Santova is a big fan of buying back their own shares. Another company, Argent, they're posting results soon, also buying back shares. So I love it when companies buy back shares at valuations that make sense. And, Apple is just such a good company. It's just such a good company. Their calculated annual growth rate the past few years has just been out of this world. I use an iPhone, a MacBook. My wife does. My friends do. It's just such a good business. And then you use the phone. You're on the phone the entire day. And then they just monetize it further through their services. Apple Music, Apple Pay, various other apps. If you subscribe to an app or on the App Store and you do the double click thing and it goes through the App Store, they take sometimes 15%, but most businesses, they take 30% cut of that. The service, it's just an incredible business. I've been on the sidelines for so long, just always thinking, okay, it's going to pull back. They can't continue to deliver, but they just do. But if you look at their hardware sales, the only revenue that increased from their hardware sales was the iPhone. MacBooks, iPads, watches, all of those products actually decreased year over year in revenue. So the iPhone is still doing well. The MacBooks, all of those products are really feeling the pressure. But then that's where their services revenue comes in. So there's always this thing where Apple, when one segment does bad, the other one comes in, and vice versa. So it's such a quality company. We know Berkshire Hathaway, Warren Buffett, it's his biggest holding. It's been for a few years, and they actually said in their investor call that they wish they had more, or they wish it didn't sell when they sold a little bit. And that brings me to Berkshire Hathaway. Their biggest holdings are Apple. Secondly, it's BofA, Bank of America, I think that is. The third one is American Express, and the fourth one is Coca-Cola. The fifth one is Chevron. So not a lot of exciting plays, although Apple could be releasing a VR headset soon and other products. But we also know that Apple launched their fintech offering where you can get a savings yield on your cash there. So they are entering the fintech space. So that's some excitement. But from the rest of the holdings, not a lot of excitement. Boring as usual, but businesses that are in demand as usual. Before we get into Palentir, Paul, any thoughts on Apple or Berkshire Hathaway?
Yeah, you're on fire this morning. I really want to disagree with you on something, but I think you're hitting the nail on the head. Apple, I love Apple. Just personally, like I've said before, I'm very happy to hold it as part of the indexes because Apple is the biggest company in the world. So whenever you buy into the index, you're buying a substantial part in Apple. I think Apple is an amazing company, and despite the recession, they've actually held up very, very well. If it wasn't for Apple, we would see a lot more red than, that we are currently doing. So massive fan. And once you, as you also said, rightly said, yes, the physical product side are maybe taking a hit. Yes, we are in a recession. People aren't going to buy the new iPhone every single year. They also have the life cycle issue, which is a weird one, because if you improve your product, then people can keep it for longer, so they don't replace it so often. So you're actually shooting yourself in the foot in the sense, but then that's where Apple services come in. So there's a lot going on here. I think there's a lot of industries where Apple is ready to pounce on new developments. So massive fan of Apple, but once again, I own it via the ETFs or the unit trust. So, and then Berkshire Hathaway and Warren Buffett, you didn't say the amounts now, I'll mention the amounts, but I mean, the biggest holding is Apple, which is 151 billion. The second biggest is 29.5 billion. So in other words, Warren Buffett really puts his money where his mouth is. He has a massive position in Apple, which is crazy to think about it. But, that speaks of conviction. And Warren Buffett isn't one to, when he, there's been quite a few times in history where he's held a significant position in a single stock. So, and Warren Buffett is Warren Buffett. I'm not going to argue with the man himself. So, but yeah, amazing conviction there.
Yeah, but Apple is an incredible company, and we're seeing businesses worldwide are struggling with hardware sales, and that is the consumer worldwide is struggling at the moment. The economies globally aren't looking too great. Everyone is raising interest rates. Inflation is globally. So, everyone is struggling a bit, and obviously Apple products aren't too cheap. But that's also where Apple is such a good business. Still, they can increase prices, and still, most consumers choose to buy Apple products. Incredible. Palentir, one of the growth companies that's also well known by Peter Thiel and Alex Karp. I've read Peter Thiel's book.
I'm reading it at the moment.
One incredible book. Really, really clever guy. He's reading that at the moment. It's a really, really good book. They posted earnings per share of 5 cents. That beat expectations. Revenue also beat expectations. And Palantir now anticipates that they will remain profitable each quarter through the end of, for the next year. And what we've been seeing with high growth companies is that if they post a profit, the share price just skyrockets, because everybody's now looking at, are you profitable? Are you making cash flow? What is your cash flow yield? What is your profits? All of that. Okay. It moves from how fast are you growing to actual, are you making money? More money than you are losing. And because of these results, because they are profitable, Palantir share price grew by quite a lot % this past week. The share price skyrocketed, to give a synonym. But the thing is about all these high growth companies, Cloudflare, CrowdStrike, Snowflake, SoFi, they're all growing at rapid rates, and they're all becoming profitable. And once they show there's growth in their profits and all of that, the share price increases a lot in the short term. But overall, it is still really, really expensive. Most of these companies, if not all of these companies. And as the quarters go on and as the years go on, they will still need to justify the valuation. So that's the first part. If you buy into these stocks, the first part is, okay, they need to still show growth to justify the valuations. Okay, that's the first part, to justify the valuation. The second part is to actually increase the valuation. And to increase the valuation, it will be to continue the growth for a longer period of time while increasing efficiency and making more profits, sustainable cash flows, and all of that. So you are taking a bet on the long-term growth, not just the short-term growth, the long-term growth. Quarter to quarter, we're going to see volatility in the share prices. But if you are an investor, you need to think, are these companies long-term viable? And how long are you willing to own the share? Because we've been seeing some of these high growth companies are now been stagnant and even decreasing the past year or so, while they've been showing incredible growth numbers in uncertain economic environment. So Palantir, for me, I think that will still be here in 20 years' time. And I think by that time, the share price will definitely be higher. But currently, I'm not too interested in high growth companies, although I own bits and pieces here and there. But for me, where the current market condition and where the narrative is at, don't bet against the narrative. It usually doesn't end well. And where the narrative is at the moment, I'm once again happy owning the shares that I have and doubling down on them, specifically companies, even in South Africa, on the JSE, that has a lot of their earnings offshore, with PE ratios of below 7, with dividend yields, buying back their own shares. So I'm comfortable with that at the moment. But, it is good to see that these growth companies are shifting their focus to profit growth, to getting free cash flow and all of that. So before we close off, remember, you can book a call with Paul. Once again, sign up to our newsletter if you want a weekly newsletter on the various, like these highlights of some of the news that happened during the week, as well as your knowledge nuggets, something educational, as well as a stock pick and some more benefits. The newsletter link is also in the link in the description. And we are launching pet insurance very, very soon, as well as a few other products which we are also announcing soon. The pet insurance is called FinMeUp. Let us know in the comments if you're going to be interested in that. Quite keen to hear. It is such a cool product. I can't wait to launch that. Thanks for watching. Thanks for watching, supporting this channel. Like and subscribe. It goes a long way. And remember to build your quiz streak on the FinMeUp app. Have a great weekend. Cheers.